Hey, this is Sasha Evdokov, founder of TradersFly.com and InvestingHelpDesk.com, here to share with you some common, frequently asked questions that I get about trading, investing, and the stock market. So this week's question is selling an option the same concept as short selling a stock? And the thing is no, it is not. There's a few major differences when it comes to trading options or selling option premium than shorting a stock. So trading a stock is going to be completely different. In theory, there could be certain similar concepts, but I think the better approach or example is to share with you how this looks as a profit picture. And when you see a profit picture, you'll really start to understand what happens underneath. So first, if we look on screen here, I have a basic simulated trading, paper trading account set up. And if we go ahead and look at buying, we're going to say 100 shares of Facebook stock, and we analyze the trade. Now, what happens is you get a profit picture. Now, this profit picture is a line of my current profit and loss for the stock. So, for example, if the stock moves up, let's say $1 or $2, a couple of dollars, I make a certain amount of money. In this case, it would be $100, which you could see right there, right near my mouse cursor. So it's about $100. And depending on how I move my mouse, you can see that as things move forward in time or in price, I make more and more money. And the inverse is true. If I actually start losing money by when the stock starts moving down in price. Okay, so basic theory of investing. Now this is 100 shares, and I've chosen 100 shares because one option contract represents 100 shares. So it makes the example easy. If I actually did this to, let's say 62 shares, something really different, you can see the line starts changing. So now for that $1 move to the upside, it really only becomes about $62 because I have 62 shares. For every one share, that stock price goes up. For every $1, that stock price, my profit picture goes up by 62. This is the delta right here that we have. So we're going to put it back to 100 shares, and now you can see this profit picture is positive. If I actually went to 0, you can see you get a flat line curve effect, and if I went to negative 100, this would be shorting a stock. You can see that now that stock is going down in price. I'm actually profitable. So you can see if it goes down about $2, I'm profitable about $203 or so. And if it goes up $1 or $2, I'm at a loss at that amount. So you can see I'm here at this point, I'm at a loss of $202. If it was only about $1, I'd be at a loss of about $98. If I scale this, because you can see here I'm at the 123 price level. So if we take a look at some of these slices right here, and let me just change this to the 123 exactly. So you can see that here I'm at a loss of $90. Okay, so if I change this to negative 300 shares, you could see the loss increases, negative 270. And the more shares you stack, obviously, the more you lose. So this is the basic concept of shorting. Okay, so if you look at shorting, this is the way it works. Now, with an option contract, if you're looking to, let's just do a quick review. If I'm looking to buy an option contract, okay, so I buy a single contract, I'll analyze the trade. The way the buying an option contract works is that this is going to the upside. You have two lines here. One is the current line, the white line, and the green line that you see here is the line at expiration. So as time moves forward, you'll notice a few more symbols here that you get. Okay, so let's delete one of these slices. So we're only working with the current live price. So you'll see that right here I have a negative 389 in theta, and that is because as time moves forward, that white line gets closer and closer to that green line, and that is due to your theta. The value of those options expire with time, so you're losing money if that stock simply stands still. So let's bring it back here to the current date, which is 7/26. So That's the thing about buying an option, is that you need it to get to this break-even point at 132 to even break even. That's at expiration. Now, of course, if it moves within a couple of days all the way up here, you would be profitable at about $180. Of course, you do have to move time forward, so that 180 might only be 160. So those are some things to consider. Now, if I was to sell this option premium, okay, so right now we're buying one. You can see this is a +1. If I was to sell one, you can see how this now actually becomes slightly different. Okay, so you can see the profit curve right here. So now we do want the stock to move to the downside because we're selling a call. Okay, I do want the stock to move down, and that's where I stay profitable. Now, the same thing is if that stock moves down, I become profitable based on my delta, the amount that it moves. Okay, and every day I'm profitable by $3.89 due to option decay. So you can see that white line gets closer to that green line. Okay, and if we zoom in a little bit further and expand these, you can see how that white line gets closer and how it really moves. So that's the way it really works. Now, the downside and disadvantage behind this, it's similar to what a stock is, though, is that you technically have unlimited risk, okay, when you're doing these calls like this. So you can see if that stock goes up to 370, you have a loss of $23,000. Now, of course, the same thing can happen when you're shorting a stock, because if that stock goes to $300, you're also down about $18,000, $20,000. So that's the thing, is you have to keep in mind when you're selling things like this, going short, you do have some risk. Now, if this stock crashes, the thing with an option is you max out at the premium price that you sell. Here we have $1.91, and the total price right here is $191 that we make, because one option contract represents 100 shares. Okay, so you can see I can check mark it, uncheck it, and that's what you see. If I did the stock, you would see it shorting like this and see the profit picture. Now, if you did the put side, okay, because we did the call side, if you did the put side, it works a little bit differently. So what I can do is can go ahead and buy now a single, and now it works actually a little bit differently. So let's uncheck this selling of the call. So you can see now this is also similar to shorting a stock, you could say, because now I'm looking to short that premium, and I can move the strike prices, of course, to let's say 100 or 105. It's kind of like buying a call, except now you're buying a put, right? You're buying the put for the downside. So you could say this is like shorting, but it's not really, because you're losing $2 every day. So now again, you need that stock to crash to about 104 or less for you to be profitable at expiration, because the same thing is happening. So you can see as time moves forward, that white line gets closer to that green line, which means you lose that theta, $2.46 per day, and that continues to get closer and closer up until the point where you lose your $89. Okay, so that's an important thing to take into account, is that, okay, you could say that if your thinking is option selling or buying, the same thing as shorting, not necessarily, because remember what shorting does. Shorting, you're looking to profit from a downside move. So the way that you could profit from a downside move in options is to sell a call, which gives you downside move exposure, or you could buy a put. Now, if you sell a put, okay, you're actually looking for that stock to go to the upside, because you're selling that put. So now you're capping your profit and earning potential here at $83. Okay, so that's the thing. You don't want to sell a put if you're looking for a downside move. Okay, so those are some of the things to consider. If you're thinking that shorting is the same as, selling option premium, it's not. It depends on the premium that you're selling. Okay, so you could buy a put if you wanted to short, or sell a call, and that would be the same thing. Now, if you're looking for the inverse, just as a little bonus, if you're looking for the upside, okay, if you're looking to go to the long on the stock, okay, what you could do is, number one, instead of selling the call, you could buy the call, or you could sell the put, because when you sell the put, you're looking for the stock to go to the upside. So you could do things in that way as well. So those are some things and tips regarding buying a stock versus selling a stock, and selling option premium versus shorting a stock, because they are slightly different. Of course, you can get some directional bias in all of these situations, but it just comes down to knowing and understanding how option contracts trade, because you do have a lot of other factors like your theta, your vega, and the delta to consider. It's all about looking at that delta, because with a bias to the upside, you want a positive delta. And if you look here, this is a positive delta, and then this is a positive delta. We got a 1048 here. And if you're looking to short a stock, so if we switch this to negative 100 shares, now you can see we have a negative delta, okay? And to short it, again, we want to sell this premium, negative 28 delta. And then here, we would want to buy it because, again, negative 10 delta. So looking at the delta, that will give you the direction. But keep in mind, with option contracts, you do have premium decay. When you buy something, you're going to lose money every day. When you sell a premium, you're going to actually gain money day by day on those premium contracts. Thanks for joining me in this video. I hope you found it helpful. And if you'd like to see more questions and answers like this one, please visit me at investinghelpdesk.com. And don't forget to sign up to the newsletter, because once you're on the newsletter, I like to send out some freebies, other training material, and sometimes you even get free offers for my books. But if you'd like to try out my critical chart service, where I post charts every single week on the current market conditions, then click this button right here on screen, and you'll get a free private access to where you can sign up to try out that critical chart service. Thanks again for joining me. In the end, remember to do what you love, contribute to others, but most importantly, live life abundantly. I'll see you next time.